Answered, and your line comes from Tito Labarada with Goldman Sachs. Your line is open.
Hi, good morning. Thank you for the call. I'm taking my questions. Congratulations on the strong results and the strong hire from Pedro. Congratulations, Pedro, on the new role. A couple questions, if I may. Maybe, Pedro, if I could start with you. Thanks for some of the color you gave on the opportunities you see in joining dLocal. But we've gotten several questions, and we'd love to hear from you. Coming from Meli, very well respected company. Just to understand a little bit, this sort of your reasoning to come over to dLocal. I mean, you talked a little bit about the opportunity. You're coming here as co-CEO role, but just love to hear a little bit more from a personal perspective. What excited you so much to make that switch? So we'd love to hear from you on that. And then second question, on the revenues, very strong performance on revenues. Seb, as you mentioned, you're maintaining the guidance there. But I'd love to get a little bit more color. You think Brazil can continue to grow the way we saw it growing this quarter? And is that coming from like one particular merchant? Is it several merchants that are giving a lot of local-to-local volumes there? And do you expect some headwinds because of the depreciation in Argentina next quarter as well? Just to understand a little bit some of the revenue dynamics and how it's going to evolve on a quarterly basis from here. Thank you.
Hi, Tito. Hi, everyone. It's great to be here. Thanks for the question. So I think I laid it out in the prepared remarks. This is a phenomenal business with a large expanding TAM, great technology and product, the right customer focus, and a winning sales organization, and a super attractive financial model. So dLocal is a gem. What I've done and what I've seen over the last 24 years is how to build scale. And I think I've seen scale in Latin American tech like few others have had, because I've had the privilege to work at the largest Latin American tech company from nearly zero to where it is today. And I've seen how the way you generate value in technology is by building scale and compounding results over the long term. And I think dLocal is the ideal landing spot for the next leg in my professional career to be able to generate scale and compound results over long time with a business that operates in a growing TAM and has a phenomenal financial model. So this is a decision that makes extreme sense for me, and I think I can add a lot of value to the great work that's being done here at dLocal.
Great, thanks, Pedro.
Tito, thanks, Pedro, and Tito, thanks for your question. So there's a lot to unpack there. Please let me know if we are covering everything. On the guidance question, so we are very proud of the first half results. We are clearly trading towards the higher end of that guidance in terms of revenue, but are clearly preferring to take a conservative approach given the macro environment. Specific changes of circumstances, such as the devaluation of Nigeria, affect our revenue number, but not our gross profit. We would like to see one more quarter before we update our yearly guidance out of abundance of caution. Tito, you know this, we have constantly over-delivered on all metrics to which we have guidance since we went public over 2 years ago. And the other thing I'll say is that the yearly guidance we provided accounts for close to 50% year-on-year growth at best-in-class margin. And this is a great outcome for our 2023, and a testament again of the resilience and the well-diversified that our business is. The other thing we'll say is that we do reiterate our midterm guidance of 35% CAGR at the gross profit level and a gross profit to EBITDA margin at 75%, which again are best in class. Giving it a little bit more qualitative comment, Tito, Brazil was great news. We grew over 100% year-over-year, 80% quarter-over-quarter, but also Mexico grew at close to 80% year-over-year. And I call those two geographies out because they are some of our most mature. And I think the underlying message here is that our geographies continue to compound, and they continue to differentiate, and they continue to drive growth for our merchants. We're going to have quarters when one market is going to grow faster than others, and that's perfectly expectable. Keep in mind, our growth is depending on our merchants' growth, and some of them will decide to ramp up faster in one country versus the other, and that's not something we control, nor something we want to control. What we do want to see is that we have multiple levers of growth working at the same time, and in that sense, this quarter was a good testament for that. There are several merchants driving that growth. We are not relying on any particular merchant across any particular geography. So in that sense, a great quarter for us. You had a question on Argentina and devaluation. Sergio, I know you have some remarks on this that are probably worth commenting on. But the only thing I'll say, Tito, on this is that we serve global merchants, and global merchants think in dollar amounts. So typically, what we've seen over the years is whenever there's a devaluation, our merchants tend to reprice pretty fast. In other words, a big streaming services doesn't think of their product being worth 10 pesos. They think of their product being worth a certain amount of dollars. And if there's devaluation, they typically reprice really fast.
Thank you. Our next question comes from Guilherme Grespan with
Not listening. I think it's all of us, yes, Pedro? You don't hear any? Yep, same here.
Can we move to the next question, please?
our next question comes from Jason Kupferberg with Bank of America. Your line is open. Jason Kupferberg, your line is open.
Hi, good morning. Thank you for taking the question. I just wanted to start on the new management arrangement. Just maybe if both Seba and Pedro maybe just want to comment a little bit on how do you foresee kind of splitting day-to-day duties going forward, especially once Pedro has the opportunity to ramp up on the business.
Hi, Jason. Sure. Pedro, feel free to compliment, please. So, Jason, first of all, Pedro and me have extremely complementary backgrounds. Ours is an opportunity that has plenty of challenges that we need to tackle. And whenever you have the ability of finding a talent like Pedro and getting him to join, it's an absolute no-brainer for us. We are still in the workings of the exact task that each one of us is going to be undertaking, but fundamentally, from a strength perspective, we are very, very complementary, and this couldn't be better news for us.
Okay. And then my second question was just on, you had that helpful slide showing the bridge on the gross margins. Just as you think about the second half and recognizing there's obviously unpredictability from a mix perspective, I mean, what's sort of a, kind of a base case working assumption that you guys are thinking about for second half gross margins, just in the context of the fact that you're obviously reiterating the guide on adjusted EBITDA for the year. Thanks.
I know, Pedro, you had some remarks that you were making, and they were cut short. I don't know if you wanna go for that.
No, I was just reiterating. I think we'll figure out the governance. Throughout my process, I've obviously done diligence, and the chemistry we've built, not only with Seba, but with the entire team, gives me confidence that there's plenty of work to be done here, and our complementarity, I think, will make that even easier. So I'm not concerned at all about that.
Jason, on your question on guidance, again, we are known to be a very conservative company in this front. We are taking an extremely conservative approach given the macro environment. We are clearly trading towards the higher end of that revenue guidance that we provided. We don't provide shorter term guidance, and I want to emphasize that we're building this for the long run. We believe over 50% year-on-year growth, and again, the midterm guidance of 35% CAGR, it's best in class. And that's what we're focusing on. We want to retain flexibility to continue to invest in the opportunity we have. This is a time for us to differentiate. The emerging markets opportunity is bigger than ever, and we want to retain the flexibility to invest as much as we see fit while maintaining the disciplined approach we've always had.
If I may,
Okay.
If you look at gross margin and net take rate in the second quarter, it was very similar to the first quarter. 1% decrease in gross margin from 45 to 44, and 0.1% decrease in net take rate. I guess that was part of your question. It's basically the result of business mix. As you see in this quarter, we have higher share of local to local. We have different country mix, particularly some countries with contributed to higher share of gross margin. We don't solve for that. As we always mention, our merchant decides when and how to grow. So the behavior of those metrics in the second half will be basically the result of how our merchant grows and which countries and which channels.
Okay. Thank you for the comments.
Thank you. Our next question comes from Guilherme Grespan with JP Morgan. Your line is open.
Hello, can you hear me?
Yes.
We do.
Yes. Thank you, Seba and the team for the presentation. Two questions on my side. The first one is related to Nigeria. You mentioned that you expect some impact from the deval, I think was 40 to 50% deval on the FX, and we already see it hitting the revenues, decline the share of Nigeria on total top line. But it was interesting to hear that you do not expect any impact into gross profits. So I'm trying to reconcile those two statements. The only way I can think of is that your gross profit margin in Nigeria is close to zero. And I do want to confirm if you operate in the country with very little margins. And the second one is related to financial income. It was very large contribution from gross financial income in the quarter. I imagine this is related to Argentinian bonds. If you can recap how much those bonds are paying, and if we had any non-recurring financial gains, meaning the appreciation of the bond in the quarter, or if this level of 19 million gross income per quarter should be the new recurring level, given now you're invested in those bonds. Thank you.
Guilherme, thank you very much for the question. So we've spoken about Nigeria in the past. Actually, in our Q1 call, we called this out, how Nigeria had a much higher than average gross take rate and much worse margin structure, given the gap between the market rate and the official rates. That was a drag on our margin structure, and that's why you saw it eroding. We broke that down in previous quarters. What has happened is that the Nigerian government has unified those two markets, and therefore the gap that was existing before between market rates and official rates doesn't exist anymore. We never process payments in any country at zero margin. That's not the business we're in. Every dollar we process contributes to our profits. And what we said is that at a gross profit level, which is a key metric we keep track of internally, this will be neutral, if not positive. Let me explain why. The gap in the FX in Nigeria made it very hard for merchants to understand why there was an official market rate and there was the market rate, and why they had to navigate all of that complexity. Some of that complexity is now solved. So for our global merchant, it's now easier to navigate this country, and we expect that to be, one, neutral to positive from a gross profit standpoint, but two, obviously accretive to our margin structure. We spoke about our margin being punished before, given our Nigeria business. Now we probably get some upside from it. Maria, Diego, feel free to complement on this point, please.
Yeah, the only thing I would add is that not only it's not zero, it's actually profitable, higher than average net margin rates country.
Guilherme, on your second question on the financial profile, Maria, Diego, do you want to take it?
So sure, we had in the quarter roughly $7.4 million of financial profits. That is basically the result of having higher amounts of cash in local markets, countries like Brazil or Argentina, as you mentioned. Part is the bond, as you mentioned, like roughly $2-3 million is results of the bond, but mostly is money markets and interest-bearing account that we have in those countries that generate cash. We use part of those profits to invest in hedges to be fully covered, and that is the cost, the financial cost that you see in the P&L. The net of those two has been very positive in the quarter. Over the medium term, that should sequentially go back to a lower number. But particularly this quarter, we have these situations where we have a significant amounts of cash invested, also at the operating company level with higher interest rates.
Just a follow-up, if I may. How much those bonds, Argentinian bonds, are paying? The curiosity.
So they are mark to market. The interest rate, the nominal interest rate of the bond is minimal, it's 0.4 because they are dollar linked. But it's mainly the results of the mark to market of that bond. But again, out of the financial income of the quarter, only a small portion of that is the bond. Most of the financial income is a result of cash held in money markets or interest-bearing accounts. I would say in Brazil, Argentina, and at the operating company level.
Guilherme, I would like to complement on the Nigeria question just to make sure this is clear. When there's a devaluation, two things happen. Our gross take rate goes down, but our cost of processing goes down. So that's why you see this being neutral at a gross profit level. Our cost of expatriation will decline heavily in the same amount as our gross revenue will decline, because those are a function of the spread between the official market rate and the market rate. So that's why you see this being neutral. I hope that's clear. I know it's complex, but I want to make sure this is properly understood.
Yeah, sure. It was clear. Thank you for the answers.
I appreciate it.
Thank you. Our next question comes from Ashwin Shirvaikar with Citi. Your line is open. Ashwin, your line is open.
Hi. Can you hear me?
Yes.
Hello. Can you? Yeah. Okay. Good to hear from you all. Perhaps maybe I can also start with, congratulations to Pedro, and also a question for you. dLocal's issue has never really been growth, which you mentioned. What one of the key reasons you're coming is the growth in TAM opportunity. I feel like the issue, as you had mentioned, is scalability over time, scalability of technology, where you can bring your expertise, governance, and a few other things. So maybe you can talk a little bit more about the challenges that you feel like they need to be overcome, and if, in your early view, based on just the diligence you did, if you feel like the investments that need to be made might be an impact on the longer-term margin structure. I know it's very, very early days, but just based on the diligence that you've done so far.
Thank you. That's a fantastic question. So conceptually, first of all, and I think this is important, like any company that's grown as much and as fast as dLocal has, there are growing pains in scaling up. I think that's evident, and I agree with your diagnostic. There's already, prior to my arrival, a lot of focus, as with any company that's growing, and work being done to strengthen whatever is needed to strengthen and to prepare for scale. But that is a big part of what I've liked about the challenge, is I feel that that's what I've done and what I like doing and what I know how to do. So we really need to set this up so that this company can grow 5x, 10x, 50x once the opportunity arises. It's a bit early. I think I will get back to you guys with a better diagnostic. I am not a big believer in throwing money at these kinds of problems. I think we throw a passion for problem solving and systems at these problems, but I still need to complete my diagnostic. This is literally day 2 for me. So stay tuned, and I think we'll come back to you guys with clarity on whether this is a matter of simply continuing to build everything that's being built, or if there might be a ramp up in investments needed. Give me a little more time, give Seba, Jaco, and myself some time to take a look at this.
I truly appreciate that answer. Seba, maybe something we have discussed before, sort of on an in-country basis, the objective perhaps of achieving reasonable balance between pains and payouts. As you look at your forward opportunity, the next 5-6 countries that you feel should ramp up, how do you feel you're situated as far as that in-country balance is concerned?
Sorry, just one thing I wanted to add. Sure. It's relevant. If the challenge to scale is investing a little margin, and I'm not saying that's the case, we've reiterated our midterm guidance, but if that's the challenge, then this is a company with best-in-class margin structure, and there's room to do so. So I really think it's a double positive here.
Thank you, Pedro. Ashwin, on your question on pains and payouts. So we like both products. They're extremely complementary, but we never have an internal target for one versus the other. It's not us that decide what product we are selling. It's our customers that decide what products they want to buy from us. We always build our operations on a completely standalone basis. And let me explain this. We never subsidize pains with payouts. We never do every dollar in our platform. It's processed at a profit, independently of it being pain or payout. So we do see significant traction for both products, but that's never an internal objective. What we'll see over time in the newer countries is that sometimes one product ramps up faster than the other, and then over time things balance out. But we never set a restriction in terms of how much growth. In other words, if we can grow extremely fast, our pains product and our payouts product will be a little bit lower. That's perfectly okay for us. Over time, we know those things do balance out. But even if they don't, we are still okay in the long run.
Understood.
Is that clear? Sure.
Yeah, understood. Thanks.
Thank you. Our next question comes from Jitendra Singh with HSBC. Your line is open. Jitendra Singh with HSBC. Your line is open.
Hi, this is Neha Agarwal with HSBC. I guess I used the wrong link. Firstly, I'd like to welcome Pedro. Very nice to have you here at dLocal. My question regarding this quarter is related to the revenues in Brazil, which saw a big jump quarter on quarter. I believe this was driven by stronger volumes in Brazil, which led to stronger revenue. So if you could just elaborate on that and give any color what drove that. Also, the TPV growth this quarter was almost 22% quarter on quarter, which is significantly higher than an average of about 10-12% that we've seen in the previous quarters. So I believe we should expect this to normalize in the coming quarters and see a more normal level of sequential TPV evolution. Thank you so much.
Hi, Neha. How are you? Good morning. Thanks for the question. So yes, our TPV grew in Brazil, and therefore our revenues grew. What I'll say is that we spoke about this in the past. We have a great solution in Brazil. The Brazilian market is massive. There's a huge sum for us to go after. And this quarter was just a testament of those trends that we were expecting that we spoke about in previous quarters. I think this should also be a lesson from how is it that our business works. We offer 40 geographies. Those geographies compound and help us win in different places at constant times. So the fact that we won in Brazil during this last quarter, it's not just a testament of our Brazil solution. It's a testament of the overall platform. This wasn't a Brazil win. This was a dLocal win that manifested during this quarter in Brazil and in Mexico. Last quarter, it was in Nigeria. So we expect growth to continue in this market. What rates? Again, we reiterated our guidance on how we see growth going forward. But I want to emphasize the point that our business is better understood at the global level, at a macro level, and not at a geography by geography basis. Geography by geography basis are merchant-based decisions that we'll always be happy to accommodate for. What we are keeping track of is how do we make sure we land and expand with our customers? How do we make sure we solve more pain points? How do we make sure we are offering more products? Because that's where the real value is.
And regarding the sequential growth in TPV?
Yeah, we're seeing our business firing at all cylinders. We spoke in the past about our pipeline being healthier than ever. We continue to see a very, very strong pipeline. Anecdotally, during this quarter, without an impact yet in the current results, we were able to sign 2 of the top 10 global merchants. So there's plenty of growth to come. Again, we don't always control the sequence at what that growth happens. That's why a focus on the mid to long term it's due in our business. But we continue to see great logo wins. We continue to see a great pipeline and a great opportunity generation. We need to continue to build a product and make sure we are best in class across all 40 emerging markets we are.
Great. Thank you so much, Seba, and thank you so much, entire dLocal team. Congratulations.
Thank you. Our next question comes from Jamie Friedman with Equity Research. Your line is open.
Hi, good morning, and let me echo the congratulations, Pedro. So my first one is for Pedro. I was just wondering, and it may be early, but a question that investors ask a lot is with regard to dLocal compliance. And I was wondering, since you incubated a great payments company as well, and Mercado Pago, what's your perspective on the compliance infrastructure at dLocal? That's one question. I'll just ask my second one as well. Sergio, we appreciated your comments about Argentina, and this is part of a continuum. But I was wondering, at a very high level, is this the same, worse, better in terms of the regulatory scrutiny at Argentina now than what you have seen in the past? So the first one for Pedro, the second one for Sergio. Thank you.
Hi, Jamie, and thanks. Neha, thanks also before I hadn't answered you. So again, guys, this is day one, but obviously that's an area that I've done as much diligence as was possible throughout our conversations. And I think what's important to understand is that the reason we add so much value to our customers is that we tackle complex markets, markets that operate very differently. I think my running joke yesterday with the press was if all of emerging markets were Switzerland, then we wouldn't generate the kind of margins, take rates, and value that we add. And so I see a compliance team and a compliance organization that is compliant. This is a publicly traded company in the US, and as such needs to be compliant. We will face local challenges, regardless of how much infrastructure, processes, and systems we continue to build. So that's part of our value. I don't think it's something that concerns me, and it's something that, and I want to stress here, will continue to be built out. The impression here should not be that, you know, this hasn't been built out, this hasn't been done. There's a great team here led by great people, and my job is to continue to make sure that we invest and we strengthen across all of our internal functions.
I will take the second question. Well, the situation in Argentina right now, it's, as you may know from the news, it's extremely volatile, and there have been changes in the last, actually in the last couple of days. Almost every day there is a change in regulation. We are big believers in the country in the long term. Right now, all we as the rest of the market is in a wait and see mode to see how this is going to evolve and what's going to happen with the election. All I can say is that we have been in the country for a long time now. We are particularly flexible. We know the market very well. We are same regulations apply to us as to the rest of the market. And we believe that we have the best knowledge and flexibility in the market, and we will use our unique position to gain advantage.
Thank you both.
Thank you. Our next question comes from Matt Code with Autonomous Research. Your line is open.
Hey guys, thanks for taking the question. Wanted to just ask a couple more on Argentina. Based on the press release and your opening statement, it seems like the investigation there is going well. Just hoping you could double click on that. And then interested in how the incremental hiring in Argentina could impact your margins over the long term. And then last one, and this kind of, you know, might be a similar answer to the one you guys just gave, but if we do see dollarization ultimately in Argentina, how does that impact your business?
Okay, I will take it. So about the investigation, we shared all of the green share on the six case, and we will do that if there is any material information. About the hiring, we are growing our payroll. We just decided that the growth is going to come more from Argentina than before. It is a place where we find very good talent, and we have completely prioritized Argentina over other countries. Right now we have over 150 FTEs, and again, as you know, hiring takes time until you find the right talent and onboarding, etc. But we are on track to increasing our workforce there. We don't see it impacting the P&L. Again, you can find very good talent. In the short term, it's a bit cheaper than other parts of the world, but in the mid to long term, we expect it to converge to international or to emerging market prices. And regarding dollarization, I don't know if it's going to happen. It's very hard to speculate on that. If it were to happen, of course, it would make our life much easier in terms of processing cross-border payments. So we would welcome that.
Thank you. Super helpful. And then I just had like one quick follow-up. The tax rate was a bit higher this quarter at 16%, 11% last quarter, and you noted like the mix to local and more financial income driving that. Could you provide any guidance for like how we should think about modeling the tax rate going forward?
So again, it would be the result of the mix of profits we have in the different countries that we operate. There are very different tax rates within the different jurisdictions, and as you know, we currently have operations in 40 countries, another 5 countries at the holding and operating company levels, so it's really complex to get a specific number. As long as we continue having a higher local to local profit as we did this quarter, and we also have a financial income, particularly in countries like Brazil and Argentina, that would trigger higher income tax rate because those countries typically have a tax rate of 30+%. So as long as that situation continues, we expect to have similar tax rates as what you have seen in Q2. But again, we don't guide for that because it will be basically the outcome of the changes in mix by country and the different type of transactions that we eventually have.
Awesome. Thanks, guys.
Thank you. Our next question. Our next question comes from Caio Prado with UBS. Your line is open. Caio Prado with UBS, your line is open.
Hey, hello everyone. Hi, Seba and team. Thank you very much for the opportunity and welcome, Pedro. I have 2 quick questions on my side, please. The first is following the management change. Just would like to have your view about the strategy going forward, if there will be any change given the recent movements, or if there is any other initiative beyond payments and your current products that you could pursue in the medium term. And if so, if you can give us an example, would be really helpful, please. And the second one, if I may, is just another quick follow-up in Argentina. Not sure if I completely understood, but I think in one of your answers you mentioned that you do not expect any impact from the additional deval in the peso as you will reprice your clients, otherwise you will have a negative input. Is that right? Just would like to confirm. And if so, have you already repriced your clients this week after the devaluation or not? That's it. Thank you.
Pedro, I'll take the second part and let you take the first one, which is the fastest. It's not that we reprice, Caio. It's that our merchants reprice. So they reprice their services, and therefore we are indexed to their dollar amounts, and as such, our own revenues reprice. It's not that we increase our take rate. It's that our merchants have higher amounts or charge higher amounts, and therefore we are de facto repricing our service.
Oi, Caio. So I learned a long time ago, you don't fix something that isn't broken. Look at the first half that we've just delivered. Our Brazilian business, so our largest business, grew revenues nearly doubled year on year. Our newer markets, which are a huge opportunity, Africa and Asia, I think grew over 2 times, nearly 2.5 times. We've had some one-offs. We had a devaluation in Nigeria and the currencies in Argentina. But if I look at the long-term prospects for this business, and that's a big reason why I'm here, this does not need a change in strategy at all.
Okay, thank you. But just wondering if you could pursue any other opportunity beyond payments, or no, it's not the strategy.
The addressable market, the global reach of this company presents significant opportunities for us. So again, reiterate, the local strategy is clear, the vision is clear, it's incredibly compelling, and what we need to do is execute on behalf of our global merchants behind their needs in fintech and emerging markets.
Okay, thank you very much, Pedro and Seba.
Thank you. That's all the time we have for questions. I'd like to turn the call back over to Seba for closing remarks.
Pedro, I think closing remarks are yours today.
Yep. Thanks for that, Seba. So first of all, thank you, everyone. Just to reiterate how excited I am to be here and the opportunity. And I do want to leave everyone with a final thought. Companies tend to get lost if they start placing excessive focus on the short term. And so we want to continue to reiterate and reemphasize to everyone that we're building this business for the long term, and that's where we're making our decisions. I'm convinced that that is how value is created in technology, as I said earlier. when you compound the kind of results we're delivering over longer periods of time. So our job as leaders of this organization is to find the best way for dLocal to be able to compound those results over a long period of time. That's why you see us investing in geographies, in product and systems. We're super, super excited about this opportunity. We have a huge market to attack globally to turn this into a multi-billion-dollar revenue business over the coming years. And that's where our focus is. I look forward to updating everyone on our progress on that journey over the course of the next few quarters. And thank you very much.